Good afternoon, everyone. Welcome to the weekly Traders Club stocks alert review. So let's start with the alert that we have posted on the 17th of September. Well, I must be honest over here that recent trading signal hasn't been doing very well. We couldn't aim for the highest profit that we would like to. While we see some small profit and then very quickly the profit turn into losses. So these are the tough times that we have been experiencing before 2020. So so welcome to the market. So what happened now is that we're going to talk about SGX, which we saw the potential of changing a trend if it can go back up to test its resistance and breakout. However, I would like to share that this SGX did not manage to do that. In fact, it pulled down lower, and right now it is actually at its support level at about 986. So what's going to happen to SGX is that if you were to go back to where it was previously, it had some bad news over here, and then it gapped down, and what you see is that there's some rebound trying to form higher low over here. So it tried to form higher low over here, but this rebound did not take place successfully, and then the counter continue lower, find another bottom. Okay, find another bottom over here, then slowly consolidate upwards, and we see it move up towards its resistance and then consolidate again. Thereafter, a strong breakout help it to turn its trend. Okay, and there we see a continuous upward movement after some pullback, of course. Okay, so what is going to be going forward for SGX right now is that can history repeat itself again? So what do you see here? You see the low, and then you see the rebound, you see the pullback attempting to form higher low over here, fail. Another attempt fail. Right now we see it retest back this low, and I'm not surprised if you were to trade below 986 or goes to 980 or 970, then it rebound back to test 1014 high. This is a small peak over here, then next will be 1030, around 1030. So for those who like to trade SGX, dollar cost averaging is possible, okay, especially if you were to look at when it start to consolidate sideways. It is good for you to add one batch, especially situation like this. You may not want to add immediately. Maybe you want to wait for more consolidation to happen, and then when it start to rebound upwards, then you can start to see the movement coming. And the key here is that it should fill up the gap going forward here at 1053 to 1073. Next, let's take a look at AEM. AEM previously had a very nice ascending triangle, and let's see what happened to it. As the previous video, I may have already covered that AEM had a breakout, but the breakout over here wasn't that successful because the next day candle and the stocks lower. So it created a whipsaw and pushed the counter lower, and I did a follow-up on the later post on AEM, citing that AEM has an uptrend line to observe, and this could be a potential higher low, but unfortunately the next following day the counter break the uptrend line. So we see this counter retest this support level at around 402, 403, and it managed to survive that, and right now it's forming a hammer. AEM has a potential to rebound, but of course this uptrend line reference will no longer be valid and so is this low. So what we are looking at is that if it can rebound back higher, we need it to test 422. So when I say that this low that we cannot reference to, I meant the uptrend reference. So if this counter is going uptrend, this potential higher low that is going to form going forward is going to be our new reference. Hitting 422 and breakout from 422 will be a point to note, because ultimately once it breaks above 422, then we are looking at 432 resistance to be tested again. Going back, let's look at ZHANG. ZHANG, we were expecting a rebound from its confluence of MA support, but unfortunately it did not. Reason being is that some investor probably fear that ZHANG has some exposure to Evergrande, which is on the brink of bankruptcy, and therefore pushing the counter lower and lower into this zone where it was previously well supported. The counter was well supported from 135 to 137, which was a major support for the counter. And right now you're seeing a potential hammer that is going to form if this counter can rebound and recover to close at 139 higher than that. Then we want to see a retest of 145. Then that could suggest a potential change in trend. So in this situation, it's more a waiting time, because we will be looking very closely at how it closed today, and then going forward, then decide what will be the next possible action for this counter. So if this counter breaks below 135, it will be a testing moment where we may see even further lower action. Moving, next is Food Empire. This is a bearish signals where we're expecting it to break support with high volume, then downtrend continues. So did it break support? Food Empire, well, it did break support over here. So you can see the reference support that we are looking at to break is 755. It did break, but the volume did not break out. So when stocks break support with no high volume, what does this mean? It means that it is not a strong selling pressure. So what we are looking at is that if it doesn't break below with high volume, what will be the next course of action is that it have any rebound or not. If it has any rebound, then it will create a whipsaw like this. So this is what you call as a whipsaw. And what we are looking at is that this counter has rebounded, and next target resistance to be tested is 80 cents. So this signal or these bearish signs will be negated once it breaks above 805, and then a new uptrend may start to form. So this signal is almost negated right now. Next is the Hourglass. So we are waiting and hoping for a higher low, but again, the market isn't that supportive, or I would rather say it's not that bullish at all. So the higher low hasn't really formed yet. Instead, what we see is consolidation over this support level, or over this range of trading from 154 to 160, about there. And then we are looking at a good positive action today, but the volume is a little bit thin, or it's really thin. So really we got to watch further to see what will be the next course of action for the Hourglass. Then we have Franken and Referral Medical. So what do we have in Franken? is that we like to see this as a higher low. And Referral Medical, we are looking at a symmetrical triangle breakout. So let's go to Franken. Unfortunately, the sudden surge in the US Treasury bond yield has caused the tech counter to go down. The selling pressure comes from the I was reading somewhere, it says that the selling pressure comes from the dollar cost averaging, or not the dollar cost averaging, I beg your pardon, is a discount cash flow model that the fund using to model the valuation of the tech counters. And therefore, when the bond yield surge, means that there are some retract of funds from the market, and therefore the target to sell are those tech counters which they have been pouring money to push up the counter for quite some time. As you can see, Franken was on uptrend, but now Franken has already fallen and retest back this support level, and therefore the uptrend is temporarily disrupted. So the next best action for Franken would be a potential ascending triangle, if possible. That will signal for a resumptions of this uptrend. Okay, and so we shall see. So for now is that this trading signal is negated while we were looking for the confirmation candles. Well, it did come, if I were to be fair, it did come at 243. Well, but then the selling pressure from the US market has pushed it down and hit the stop level. Okay, and we do see a small downtrend over here. So if you were to view Franken as a trading target, of course you may want to consider to exit the stocks first, but given that the stocks is trading at support right now, maybe you want to wait for a moment and see whether it can rebound from support. Or if you just want to reset and just restart everything, well, might as well just get rid of it. But if you view this as a long-term counter which has a very strong fundamental, and the tech is expected to recover probably later this year, maybe next 2 months or next year, then you should hold and then wait for the long-term ride to come, or the long-term bullishness to come. So it's up to you, right? So disclaimer still apply. Next, we are looking at Referral Medical. This is one of the rare counter that, after a long wait, finally a strong breakout happened. With a strong closing today, so hopefully later it closes above 147 or 148, then we may see more upward movement as the symmetrical triangle projects the target to be 155. So the target should be about 155 thereabouts. Around here, 154, 155. So congratulations to those who had Referral Medical, and hope that this will be our multi-bagger. Next, we have Venture. We are looking at signals of potential rebound, but then again, due to that inflation fear and economic growth fear, etc., what reason they can find, it got pushed down to retest its major support at around 1782. Then after that, a rebound can happen if this counter can sustain its price action at 1798, or best it closes at 1806. Then we need it to test 1829 to move higher. So keep a close eye on this support level at 1782. AEM, we talked about it earlier. Then we have Golden Energy. So Golden Energy, we were expecting a breakout to happen with surge in volume, but unfortunately 3-4 resistance held pretty well. But it's not game over for the counter for now, so we've got to watch very closely to see whether the breakout can be successful going forward. Then we have Jardin CNC. Since the Jardin family loves to do share buyback recently, and then we have Jardin just posted, and it actually has been trading higher today, higher than the previous day high. 1929 was the high yesterday, so today it is trading above it right now. Seemingly a rebound is getting a confirmation if it can sustain at this high. So going forward, we like to see it cross the first target at 1969, followed by 2010. This comes to the end of the stocks discussions that we have for today. And I'm going to go through one of the new features that has been released by ChartNexus, where we talk about the FA screener. So let's call back the list over here. So you can see that there's an FA screener here. So how do you get to this screen? Just simply click on the vertical 3 dots and there's an FA screener over here. So you click on this FA screener, click on this icon, you will get to this screener page. And what do you do? Okay, click on this FA plus FA filter, and then you can filter out stocks based on their fundamental values. And I'm just going to demonstrate, some of the common fundamental numbers that those FA traders will look at. We are looking at valuations. So price to earnings ratio and price to book. Okay, so price to book value. So what we are looking at is that we are looking at the price to earnings ratio for some stocks that are still relatively cheap. And if it's still growing, then of course we may see more upward movement going forward for the stocks. And then we are looking at price to book value. If it hasn't traded very far away from its book value, and yet it's still growing, then we may see more this upside coming in. Okay, so I'll add these two to the screener. And what I'm going to do is I'm going to adjust the value. Okay, so from 0 to 100, I would just like to focus on stocks that has a PE ratio of just less than 20. Okay, so less than 20 means that they are relatively cheap. So 0 to 20, they are relatively low in terms of current value. And then price to book, I would like to be number 2, 0 to 2. So looking at 0 to 2, why? Because 1 means it is at its book value. If it's below 2 means it's slightly above its book value only. So these calculations of price to earnings is based on last or the latest earnings released, and then I'm looking at not the annual, because annual it means that last year one. I'm looking at ETM. And why am I not looking at interim? Because interim for price to earning is not really accurate, because it's based on the quarterly or half yearly report EPS, for example, to calculate that PE ratio, which can be very high because it's only based on half yearly to calculate. So I like TTM trailing 12 months because I use the past two half year report to calculate its PE ratio. So same here. So I like to have this saved. Okay, so once I save it, next time I can use this template to screen for new stocks or new information. So I just save and then put a template name PE versus PE and PB. Okay, and create. And then I'll just start to screen. Okay, so the result will come out on this side of the chart. Then I will just close this. Then I get the list of counters that have fulfilled my criteria, where I'm looking at price to earnings ratio. If you look at this list, you might find that yes, ZHANG that we have discussed. Look at ZHANG, they have so much, back or book orders, so much book orders, and then they are signing more and more contracts, and yet they're only trading at price to earning ratio of 9 times, and they are trading below its book value at 0.82 times. So of course, market sentiment plays a part, but definitely ZHANG do have a chance. Okay, then if we look at the list here, ISDN, we have covered very much on the tech counters in the past, and I'm not sure whether you're interested in it, but then of course, if you look at ISDN, it is trading at below 20, slightly below 20, and 1.91 times to its book value. So I would say that it's slightly expensive a little bit, but still it is growth stocks, so the PE ratio is pretty low for growing stocks. So typically it can hit to 30 to 40. So if it really goes to 30 to 40 times, means that the share price can really go up from the current 66 or 65 cents. Then just now we highlighted Samudera, and if you look at the price to earning, it is just 4.61, and the price to book value is just 74 cents. So therefore, it actually starts to trigger me that, hey, this counter, since it's trading at such a low price, and today I have received an email from from this very popular gaming is what we call the gaming store. Okay, gaming store. So what do they say? They have sent a very good email, I must say. This email is about its pricing. Its pricing of its product. Okay, I'd like to share this email with you. So to give you it's related to Samudera shipping. Okay, and just like to share this with you on the screen. Okay, so what we are looking at is that they have sent me an email saying that their price are going up. So this is Secret Lab. So why do I receive this email? Because I've been looking at their chairs. They are quite popular. They've been doing a lot of advertisement. So I went to their site a few times, subscribed to their, their emails, and then this is why I got this. Okay, so you see here is that the freight rate index up over 600% since 2019. So you can see that in just last year, September 2020, the freight rate was just slightly below 2005, and right now it is a whooping 11,109. Wow. So I am looking at this shipping freight rate, okay, that has skyrocketed, and then Samudera is doing shipping. So hopefully this gives us some information that and you look at this piece of information over here. International freight rates have soared since September 2022, source from the Baltic Index. So Baltic is for shipping or ship lining, okay, not air. Okay, so yeah, aluminum price has gone up. Okay, so basically these are the things that has been helping Samudera's book. So like I say, technically if you can show us 655 and break up from there, uptrend continues. All right, so I hope that you enjoy this FA screener, and then you can use this to help you to screen for all the stocks that you would like to. So if I go through down the list, we have OCBC just trading slightly above its book at 1.07. PE is relatively low. Why? You see, you come to think of it, that our banks every quarter announce record earnings has been growing at a very good pace, but the P is just 11 times. OCBC just 11 times. DBS, I think DBS is the least. I just saw it when I was screening for stocks. DBS, let's see whether did I miss it or not. DBS here. DBS Group 13 times with just 1.36, just slightly above its book value. So for growth stocks like UOB Bank, our UOB Bank only 8.8 times its PE, trading at just slightly above book value at 1.03. So these are the key informations that may help you to decide, whether should you be going into a bank. Of course, there's no brainer. Every time they record earnings that are so strong, and yet they are still relatively cheap. And of course, you may see here we have a lot of other counters like Olam, etc. for information. So don't hesitate, just go in and have fun. It's free right now, so please be mindful that this may not be free forever, so please do not miss this opportunity. Okay, so I'll see you next time. Have a good week ahead. I'll see you next week.